From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 5th, 2017. I hope you had a great long weekend and are ready to get started trading for this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started. With the USDCHF, the dollar franc, we have seen this pair in a declining or falling channel over the past several weeks. You can see that highlighted with the two blue trend lines that you see here on the right hand side of the chart. Last week, we made some pressure higher. We made some push back up here into the mid 9600s, but so far the market has been back in decline inside the channel, now holding underneath the 9600 level. The pink shaded area here at the bottom of the chart, 9600 to 9620, has been holding as resistance yesterday and today, so far this week, holding resistance underneath that 9600 level. So if we're going to see any rise or rally for the dollar franc, it's going to be an imperative that it breaks through that channel, gets above the pink zone, and changes the pattern of what has been this trend for the past several weeks. It would have to get above this blue trend line and pink shaded area. So we don't see that happening today. So for the day today, I might expect that the market will just hold underneath the 9600 level and has the possibility of falling down to our next support again down here towards 95.50, 95.30. I don't think today is a good time, or the timing is not right to go long. If you're going to go long, obviously today that would have been better down here at the 95.50 level, the green shaded area, closer towards the maybe even the bottom of the chart into the purple zone, the bottom of the falling channel. So it's not down there at the green zone or the purple zone, so not really a good time to go long. Maybe on the intraday, more likely your risk reward is better for the short side for the dollar franc. Take it on down to the 4-hour time frame, and that won't really change. You can see it holding underneath this purple zone, or sorry, pink zone I should say, 9600, 9620. I don't think you want to go long right now. If anything, today may be a better short opportunity for the dollar franc. Moving on over to the euro dollar, clearly the trend is up. That has not changed, but we have seen the market hesitating and pausing up here at the top of the trend. Let's zoom it in a little bit on this, and you can see that pause. It made the spike high into the 1.2 thousands, came back down, now sitting right around the 1.19 or 1890 level, the orange shaded area. Look at this, 1, 2, 3, 4 days, just kind of bouncing around, a little bit above it, a little bit below it, but right around or just underneath that 1.1900 level. I don't think you want to go short today. Let's zoom it in one more time. I don't think going short on top of this orange shaded area is a good idea. You just take a look. The past 3 days it has been very muted. It's been unable to break through the bottom side of this orange zone to go down to the green zone. So if you're looking for a short opportunity, I think you must wait for the breakdown of this orange zone, 1870, 1890. Otherwise, you run the risk of continued support and a rally back to the purple zone, at minimum, back into the 1940, 1975 level. So at least right now, just the opposite of what we just spoke about on the dollar franc, where it's underneath resistance and a difficult place to buy it, but maybe a short opportunity. In this case, it's on top of support, difficult place to sell it. It may be better intraday to look for an opportunity to go long on the euro dollar. 4-hour time frame won't really change any of that, just shows you what the market's been doing around this orange shaded area. Last week we had spikes below and above, but just sitting here. So if anything today, not really your opportune time to go short, but maybe an intraday opportunity to go long. It's hard to get back to the purple zone, or even more aggressive back to the yellow zone for the euro dollar this week. Moving down to the GBPUSD, I do want to take a little bit of a moment to take it out to the weekly time frame and look at this black trend line on the weekly time frame. I'm going to zoom way in and notice how the market broke through it on the weekly time frame and has rallied last week and so far this week just underneath that. I think that's important for our analysis here on the pound dollar, is that we're under the long-term trend line. Now let's take it back down to the daily. You can see there's that same black trend line. The market's been toying around 1, 2, 3, 4, 5, 6, 7 days now, just toying around with that black trend line. It did that about 5 days back here on top of it, made the dip down. Now we're about 6 or 7 days just underneath a 1.2965 35 level. So at least right now, I think this is a difficult place to go long because we have found resistance here for 6 days. So difficult place to go long. Maybe an opportunity to go short. It's had a difficult time going back down again too. Look at the 100 period simple moving average sitting here holding up support. So right now it's been held up by the 100 period moving average from going lower, and it's held up by the longer term trend line and the resistance to go higher. So it's just kind of having a difficult time with this 129.35.65 level. If you're looking for an opportunity, I think going short is still the opportunity that I would be more inclined to take, at least at this point, given the Forex Black Book being red, given the fact that on the weekly we just observed it underneath that black trend line. I just think going short is a clearly a better opportunity, but be watchful for the break above that, and that would be a risk on the trade if you decide to go short. Let's take it down to the 4-hour time frame. Doesn't really change it. Just take a look at the risk that's happening, or the resistance that's happening here around the 1.2965. Hit it, bounce down, hit it, bounce down. I suspect there's still some stop losses likely above here, so any quick push back up into 1.3000 could see a significant pullback as stop losses are achieved, or a significant push towards 3,000 if stop losses are achieved. If not, if it can't get through 29.65, right on back down underneath 35, could head back down to the yellow zone for the pound dollar this week. Take it over here to the USDCAD dollar CAD. We are at the bottom of the trend. That's not too hard to see here. We're at the very bottom of the green trend line, 1.2385 or so, holding support. It's having a difficult time continuing to go lower, though. Yesterday, of course, bank holiday in both Canada and the U.S. Limited trading yesterday, but it hasn't made headway lower since making that jog down here into the mid to upper 1.2300. So still waiting to see what's going to happen here at the bottom of the trend. I always think it's difficult to go short or sell anything at the lowest price that it's been in multiple months. So difficult to sell anything at the lowest price, but watchful for the breakout. Of course, a breakout underneath the orange zone, 2385 or so. We'll look for the continuation of the downside and the trend. Turn around from here back above 2430. We could look for the turn back higher. Once again, watchful for reversal, but definitely the trend is down, and that may be the best opportunity here for the dollar CAD. Moving over to the USDJPY. A couple of weeks ago, black box, we saw it bouncing around between the yellow and the pink shaded area. Broke down, bounced around for quite a long time in the blue box between the purple and the yellow zone. Attempted to get above it last week. It got all the way up into 110.65. Now we're back underneath the yellow zone, 109.75, 110.10. So for the time being, the only reason to go short would be at the yellow zone, obviously, because of resistance into that area, or it breaks down underneath the purple zone. Those are your opportunities to go short. Going long, we have that opportunity that may arise as it settles down back into support at 109.10, 108.85 or so. And I mean, there's a lot of support here that it would have to break to get lower. So I'm looking for 109.10, 108.85 as a potential opportunity to go long here. Watching the US dollar, global crisis has, could have some influence on the dollar. We'll have to wait and see, but at least right now, if you're going to go long, purple zone becomes a lower risk and higher reward opportunity. Obviously the orange zone as well, or back above the yellow zone. If you're looking to go short, I don't think on top of the purple zone is a good opportunity, or at least right now the timing's not right to go short on top of the purple shaded area for the US yen. Let's take it on over to the AUDUSD. Look at this. We've had this area between the orange and the purple zone, or pink zone, I guess. 79.50, 79.65 is the pink zone. Orange zone, 78.85, 79.05. Look at this. Several days. This is the weekly, or sorry, the daily time frame. This is a couple of weeks right now. It's been bouncing around between the orange and the pink shaded area. Let's be cautious on the breakout. We don't want to fall prey to a false breakout. If you just did that over the past couple of weeks, take a look. Let's zoom it back in. Over the past, let's count them out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. Let's just take this black box and put it right here. 15 days it's been bouncing around between the pink and the orange shaded area. And over the past week, we saw 1, 2, 3 times where it challenged above, 1 time below. Don't get fooled into the false breakout. We want real evidence of the breakout before we expect it to go higher back to the next resistance, which is the blue zone at the top of the chart. I'm sure a lot of folks tried to buy it here and were a little bit dissatisfied with it. So let's be watchful and careful about falling prey to the false breakout. Anything back underneath 79.50 could see the Australian dollar take another push back to the blue trend line, the orange shaded area. And of course, at some point in time, if it breaks above or below this black box, we'll look for the continued trend action. I think buying is still probably the best opportunity in the direction of the trend, which is the blue trend line, of course. So watchful for the breakout above 79.65, turning back into the mid to low 8,000s for the Australian dollar. Still, I think will be your best opportunity for this currency pair. And lastly, moving on over to the NZD/USD, two trends, blue trend line, black trend line. We're clearly in the downtrend, the black trend line. So if you're going to sell it, you sell rallies to resistance. We did that a couple of weeks ago. We sold into the resistance, the orange zone here for the New Zealand dollar. We had some profit on that fall from the orange zone on down. So in a similar situation where we see, a rise and then a fall, a rise and then a fall, we're in the rise phase now. In the pattern of the trend, we see rise, fall, rise, green shaded area, black trend line, looking for resistance. Took 3 days to reverse here, took 4 or 5 days here to reverse to go down. It doesn't have to happen immediately, but this is the place where you're going to start looking for it. Into the 72, 72.20 level, the green shaded area. The risk, of course, would be clear. That breaks back above the black trend line green zone and starts working its way back higher again. Let's take it on down to the 4-hour time frame. There it is, coming across now into or coming up close to the green shaded area. Again, I think if we're looking for that opportunity, the closer we can get there, and look at the supports back here, that's 7,200. The closer we can get there, at least minimizes our risk. Of course, our risk is a break above the green zone, black trend line. Take a look. They had that spike right into the top of the orange zone and then fell. So anywhere, I think anywhere between 7,200, 7,220. The closer you can get to 20, the limited the risk. Just think about this area right here. Let me just put a circle here. Just think about that area right there where it made its rally deep into 72.90 before falling. That's a similar situation. A rally deep into the green zone, a sudden reversal like the red candle that you see right here at the orange zone inside the black circle. Then we look for the opportunity to go short again on the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.